Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 28th of November. So we've had a rickety old week with pretty big highs on a lot of the majors and some stability in some of the currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD today, and we've seen a really good bounce off what was a pretty strong support level around that sort of 64.20-ish area. You can see that here it was a very heavy congested zone around this price point, and then we had this really strong support, both basically a double bottom really, that formed perfectly and played out. And as you can see, it touched it basically to the pip and off it went. It's been a very strong week in terms of movement. You can, even if you go to a 15-minute chart, I think you have to zoom quite a bit to see it. But as you can see, pullbacks to the 20 moving average, all the things that we talk about all the way up. So really good trading. And you could have done it on the 1 hour as well. Like once they bounce off a certain level, you generally get really good patterns. And that's what we're looking for each and every time. So good trading on the Aussie dollar. I think it's still technically in a downtrend though. You've got to remember that. Like we've still got a series of lower highs and lower lows happening. So we've got the high, the low, the lower high, and then of course we had the lower low. What happens now, it is above the 20 moving average and above, it's broken what effectively is a reasonable resistance zone at 65. So and it's also broken the 220 moving averages, which is obviously very important. So if it manages to get itself back up above this previous high here, it's going to break that downward cycle, and there should be enough momentum to carry it back through to around that sort of 66.20 area, which is the next very heavy resistance. But if it fails at this point here and rolls over and all of a sudden it's trading underneath the moving averages again before it actually makes a new high or higher than here, then more than likely we're aiming back down to the support zone, and you can start looking for shorting opportunities down to that. And those opportunities come in the form of lower high and lower low sequences on a smaller time frame. So really pretty straightforward. All we're looking for is a break of that zone here. And if we do that, 66.20 should be the target. And if it rolls over and fails to make a new high here, we'll be looking back at that 64.20 as the target for the Aussie. All right, we'll go over to the US dollar CAD as well. This has been another one, and it's another interesting one really, because it's been very strong over the recent period. You know all about the morning star that happened here in the higher low sequences, but it has failed to make a new high, very similar to the dollar index, which we will look at as well in a moment. But you can see that it did actually fail to make it made an equal high, but it failed to make a new high. And that being the case, we're always going to be a little bit concerned that momentum may have dried up on it. Now, look, it was a 141. It was a pretty strong level anyway, but it should have had enough gas in it to get to 41.80 if that momentum was strong. So what we're really identifying here is a potential weakness in the momentum that has pushed it to this level in the first place. Now, it's at a bit of a do or die level in terms of moving averages, because the 20 moving average is trading slightly below it at the moment, but it would need to get up there and up there quickly before we can call it a complete break. I would allow it a day to potentially get back up there, but if it's trading and sells off from here, then I think we're probably looking back at around that sort of 139.20 as the potential target for the short, back where the morning star started. And that's obviously an equal high is a weakening high. We know that, so we want to be mindful of that. If, however, it trades above the 20 moving average again and pushes to a new high, then 141 is going to be the 141.80. Sorry, is going to be the target there. So it's pretty good trading on the CAD. I think that it's been technically very sound, but again, you've got to be a bit careful around this level because it's a very important zone for it. There is support here, and it needs to get above that 20 moving average to make that support count. Again, if you go to a smaller time frame, even on a 1 hour chart, you would have seen the lower high, lower low sequences played out perfectly. Same on the way up to actually get there in the first place. So it was good trading and very technical. So pretty good there. All right, we'll move over to the dollar index now. And yeah, this is very similar to the CAD in the sense that it's been strong in terms of momentum. We've obviously got higher high and higher lows playing out quite nicely. But when we reached this level here at the 100.50, it made an equal high and failed to actually go past it. So again, it's one of those do or die, very similar to the CAD in the sense that it needs to get above that 20 moving average and hold above that level in order to maintain the strength that we need it to basically break that high. If we get a break above that 100.50, then it really opens it up to, basically 101.80, I think is the target that I'd be looking for in that instance, which is going to bring the euro down to around sort of 114-ish, maybe 113.50. So that's what we're looking for in that regard. We need a break of this zone here, but in order for that to happen, we need that momentum to carry through that's already built up here and a close above that 20 moving average would be a really, really good starting point. So I think that we are looking good here at the support right now, but it wouldn't want to go much lower. If it starts trading underneath that 99.20 area and breaks the moving averages, then I think the longer term momentum has probably shifted, and we'd start to target other things. I'm not so sure we're going to be happy with that result, to be honest. So we ideally want it to go long because our bias is for the long side. There's more momentum on that side, and I think it's a better trade. If, however, it gets below the 99.20, all of a sudden that's a double top, and then we're breaking the neckline, and then obviously we're going to be looking at targeting the that 97.80 area as the target move for that particular move, because that pattern was going to constitute a target of around that sort of 97.80-ish as the equal of the neckline to the top of those peaks. So pretty straightforward trading in that regard too. Over to the S&P 500, and look, this one's been a powerhouse this week. It's done. Effectively, it's had a very, very quiet session. If you go to a 15-minute chart, the last session was effectively nothing. All right, so with this one, we know that we've got basically public holidays trading in the US with the Black Friday. So very, very flat market. They do not get flatter than that. It effectively did not move, which is not that unexpected. And I think it's going to be a long weekend for the most part. So we're probably going to see quite a bit of this flatness play out in a lot of the markets, because we know the US obviously leads the way a lot in the world markets. But really not a lot to talk about in terms of what it's done here. But in terms of what it's done for the week, it was actually really, really large. And leading into a major public holiday like Black Friday is, we generally see a really good influx. But what we also see on the other side of the break generally is a little bit of weakness. So don't be surprised if we get a little bit of weakness on Monday and Tuesday of next week, because quite often after the excitement that has been built up over the last week, you can see we had I think 4 or 5 really solid candles of power, broke all of the moving averages, broke up all past the resistance at 67.50. It did a really, really good job. But it is a public holiday now and a long weekend, so it is very, very likely that we might see weakness on Monday and Tuesday. So just be mindful of that. And it has failed to make that previous high just yet. It's had a crack at it, but hasn't made it yet. So if it doesn't creep up there before Monday or Tuesday, we may see a little bit of weakness. And I think that weakness will probably pull it back to around, I'd be probably aiming for scalping opportunities down to 67.20 in the first instance, with a backup of 67.20, probably at 66.20, sorry, at this level here. That would be the target for the short, the main target. But you will find a little bit of support probably around this level here, around the 67.20 as well. But pretty good trading. I think that we've got some good opportunities coming up on it. If the strength continues and the markets are running hot, especially early next week, then look for the previous highs. The all-time highs are not very far away. So it's only, 85 points away from an all-time high. It may go up there, but at that point, I'd be starting to get very nervous about long moves from there. So maybe look for potential resistance there and rollover points on the smaller time frame. So that was more than likely to play out on the S&P 500. And finally, we'll have a look at Bitcoin. Look, it's had a really, really strong couple of weeks. It got down to the 80,000, which, we thought as an extreme move, it may well do. This has been very, very good to us, as you know. We've got some really, really good trading opportunities on Bitcoin so far. It has reacted as we would expect, and it's pulled all the way back up to 92. So from a technical standpoint, it's playing out exactly as you would want it to in terms of finding support and reacting quite aggressively off that support. Just be mindful that 91,000 and 92,000 is a very, very heavy level of resistance, like it was support earlier on. So, and the 20 moving average is all but caught up there. So if it hovers around here and doesn't do much for the next little bit, we could find a fair bit of resistance at this point here with the 20 moving average. And if it starts to roll over, the easy play is to look back down at where it reached last time, which is around the 80,000, and look for opportunities on the smaller time frame, any lower high, lower low sequences on the way down, and I'd be aiming for the 80,000. But if it gets past the 20 moving average and starts cranking up, around that 98,000 would be the target from that point on. So be really careful around here though, because that 20 moving average is bearing down on it, and we know there is pretty heavy resistance at the 92 to 91,000 market. So just be mindful about that. All right, so I hope everyone's had a great week's trading. We've seen some really good opportunities. Have a fantastic weekend. I look forward to seeing you all next week.